Now for a closer look at what's playing itself out in that market scene is Katzenellenbogen from Sanlam Private Wealth. Greg, a happy Monday to you. Thank you for your time today.
Happy Monday.
Wonderful, Greg. Maybe we can start off by just taking stock of what markets might be trying to digest. Last week was a big week, I think, on the back of those FOMC minutes and Jackson Hole. There was quite a bit for markets to try to gauge.
Quite a bit, but the bottom line that everyone focused on was the fact that Jerome Powell now said the direction is clear, by which he means that interest rates are on the downward path. And the question now is whether it will just be 25 basis points or 50 basis points. So 25 basis points is probably baked into the cake, but there's at least a 40% chance of 50 basis points, although I would err on the side of caution that I think although he's let the markets know that, we will see lower interest rates, I think that he is not declaring the battle against inflation won just yet. Although the other interesting thing is he said that the 2% target for inflation was now a floor and not a ceiling, so which they believe that inflation will probably settle higher on average than 2%, maybe closer to 3% going forward.
Very interesting indeed, Greg. Also keen to maybe then take a look at the week ahead. We are expecting a PCE data, that personal consumption expenditures data, to emerge from the US. It is their favorite, I think, preferred print there to gauge where the consumer is. Is this likely to bear any sort of influence based on what we've just said about Jerome Powell and his conviction about where we are with interest rates?
Well, he did say that although the interest rate direction was to cut rates, it would be data dependent. So that we'll see. But if the revision in the jobs numbers was quite a big shock to the market to show such a big 800,000 revision. So it's showing that the US market is actually slowing down. So PCE, personal consumption, is a important indicator for them, and hopefully it will show that they are winning the battle against inflation. But 1 month of data that might be showing a higher level is not going to deter them from the path of lower interest rates.
We are also expecting this week, Greg, for NVIDIA to, release their set of numbers here. I'm keen to get your thoughts on what might emerge here. This has been, of course, one of the most talked about companies in 2024.
Well, I think the thing is that, your markets, they expect NVIDIA to have massive jump in revenues and growth. 20%, 25% is not going to cut it. That would be taken as a massive disappointment. But of course, the forecast is for NVIDIA to continue along the path they have been traveling, and that is, significant increases in revenue and growth every quarter. However, I must caution that at some stage that, nothing grows to the sky. And eventually that growth has to slow down at some stage, but people are not prepared to jump off the train just yet. But I think that you'll find that this quarter's earnings for NVIDIA, they will continue to show strong growth.
Then looking at some companies with numbers out from here at home, Greg, maybe starting off with Italtile. I'm keen to get your thoughts on how they've performed here. Shareholders are expecting some sort of a windfall here. I do see the share price is up by only 0.62%. So it sounds like markets aren't overly, excited even about the fact that it might be a good dividend payout at this time.
Yeah, well, the market is a little disappointed. They reported a 9% drop in their pre-tax profits to 2.1 billion from 2.3 a year over the period. Also, revenue did fall to about 9 billion from about 9.1 billion. So showing that consumers are still very price sensitive, and there's competitive pressures, but they did declare a special dividend, as you've mentioned, and they also increased their normal dividend to 127 cents. So that's double from the previous 53, and then on top of that, the 78%. a 78 cents special dividend. So they're saying they're generating strong cash, but generally reports the earnings slightly disappointing. Earnings per share was down just under 8%. To 122 cents from 132. So, they did flag that the competitive landscape had changed, and there are a lot more aggressive competitors in the market, but they still seem to be the industry leader.
Then let's talk about Advotech. I see that share price also up just over 1% now. Revenues are up here. We're seeing operating profits before interest and non-trading items also up. But that share price, I think, not doing as well as I thought. I mean, HEPS is up 16%, but that share price is only up, just like 1%, just over 1%. I'm wondering if markets expected more here.
Well, I think the market did, although the results are not bad. Pre-tax profit was up 15% to 770 odd million for the 6 months. Revenue up just under 9%. But encouraging was that student enrollments were up nearly 6% to 93,000 from 88, and their revenue in the South African schools division was 11% higher, and also experienced strong growth in the rest of Africa. Their revenue up about 11%. So the dividend at 38 cents up 27%. I thought it was a decent set of results. So I'm surprised also that the market hasn't. The market is quite unforgiving now unless you get these 20+% increases in your earnings. They see it as a disappointment. But I think, Advotech is a good, solid company.
And staying with education, keen to get your thoughts on Stadio. That share price up more than 6%, so markets are maybe preferring Stadio at this time.
Well, yes, their pre-tax profits were up 14% to 200 million in the first 6 months of this year from 176. Revenue was also up 16% to 800 odd million. So, and they, supported by new student growth in their higher education division. Their student numbers were also up nearly 10% to 47,000 in the first term from 42. And the company is saying that their numbers are reflecting good overall growth of 10%. So, and there's strong demand for professional qualifications. So the education sector seems to be picking up a lot in South Africa now, and they say Stadio are going to pursue growth opportunities, but they're going to return excess cash to shareholders. They pay their dividend on an annual basis, but they say there's high demand for their offerings.
Greg, I'd like us to go into our stock pick segment now, but first I'd like us to take a look at counters that have found a favor with industry peers.
I looked at this little company, Combined Motor Holdings, or CMH.
Yes.
So basically, they're involved in the retail of new and used vehicles. I don't know. So they've got dealerships across, South Africa. They are tightly held. They've got workshops. They sell parts. They even have First One, which is, when you go to Cape Town, you go to East London, wherever, you could hire a car with them. And they've got incredible service. I did, when I went to the Eastern Cape, I did use them, which is quite interesting. I didn't know it was owned by them then, but now after doing some research,
yeah,
I'm well equipped.
And don't they have a partnership with FlySafair?
Yes,
First One, yes,
so
I think
they've
yes.
got a partnership with one of the airlines. Yes, I think that's how I got into actually.
Yes.
Getting a car there with them at a decent discount.
Yeah.
So in the past, so basically when we started looking at it, this thing was had a dividend yield of 14%. In 5 years, it sort of bumbled, sideways with not much action, while the underlying, so the revenues, especially on second-hand cars, was growing. Even on brand new cars was growing. Therefore, earnings is going as well, going in the right direction. They pay the dividend. They've never faltered on the dividend. So it's a solid, mid-cap holding that was worth 1.9 billion. And then I blinked this week. It's now worth 2.5 billion. Like, what's going on? So the market is finally waking up to this one. Maybe there's a catalyst, that we don't know about, a takeover or something along the line. So I like it at this point, especially since there's now new and refreshed interest into the share price. We're seeing that the volumes there are picking up. So looking at CMH, I'm like,
I always pick the SA Inc. stocks.
Yes.
I've never ever chosen any of the international ones. So seeing that Alphabet, the holding company of Google, is down 15%, I think that gives us a buying opportunity if you don't already have exposure to the AI stocks. And with the forward PE of 21.7, I think that's a fair valuation. One just has to be careful because they are facing antitrust issues and they might have to pay a hefty fine, but I think it's already discounted in that share price. So I do think that the current level is quite attractive.
All right, Greg, keen to get your thoughts on those. We've got CMH and Alphabet.
Yeah, CMH is not a company that I follow closely, but certainly Alphabet, I think that offers a great opportunity. It has struggled somewhat. The market has felt that it's been lagging behind in AI, but I think the company is certainly looking to rectify that and spending a lot of money on improving its AI capability. Plus, also advertising revenue has been going up quite nicely. So I do like Alphabet.
And which counter are you loving this afternoon?
So I'm going for Abbott Laboratories. So it's an Illinois-based medical device company, pharmaceuticals, various healthcare products. This is a company that has consistently paid dividends for 400 odd quarters and raised its dividend for 52 consecutive years. So, and they have a diversified business model. The reason I like the stock is that I think that if we're going to see some sort of slowdown in the United States and we have maybe even a recession, although it might only be a shallow recession, but even so, if you have a slowdown in the US, then defensive stocks will be highly sought after, and pharmaceutical are very defensive. This is a company that 10 billion in revenue in the second quarter, and it has about $5 billion of cash and paying a very good dividend. So I think that it's a good stock to have in the portfolio, specifically if you're looking to start to overweight defensive sectors.
Well, Greg, thank you for getting the week going for us. An absolute pleasure having you today. Thank you. Have a good one. That was your midday markets update with Sanlam Private Wealth's Greg Katzenellenbogen.